This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today I'm going to talk about the stock market, give you the update on the market conditions, and go into a little bit more on the individual indices, really focus on the S&P and the QQQ. But I did want to mention that I am doing this. I have an obligation. I got to be out of the office, so I'm doing this at 3 o'clock on Thursday for Friday morning's post, just so you know. So hopefully there's not going to be a massive amount of more deterioration or massive rally between now and then. But the reality is we've got some key levels, and that's really what I'm going to be focused on today. I'm not going to get into the nitty gritty on the really minor time frames. One of the things I would tell you is that, what I try and do on this channel, and obviously on Tuesdays, that's all I do, is provide an education on how to use multiple time frames, how to use the momentum characteristics. And really what we want to do is start in a single time frame and learn what the price and price structure and what the individual bars are telling us by looking at those bars and looking what the candlesticks look like. And then we want to look at price structure. If you use a zigzag, there's nothing wrong with that. You can have that to help you with the price structure. And then we have the moving averages that will help tremendously with price structure, but also give some additional signals. And then we want to look at the MACD, and we want to look at ADX, and we want to look at volume. Those are basically my primary indicators in any single time frame. Now, I do the same thing in every time frame. So if I'm looking at a monthly chart or whether I'm looking at a 2-minute chart, they have the exact same indicators on them. And so what I like to do is keep the ratio between 1 to 5. So, typically, obviously, if you look at a daily, there's 5 days in a week. So that works together very well. The weekly and the daily are a great combination. Now, the only time it gets a little fuzzy is if you look at the daily chart with the hourly, then it gets up to about 6.5. And so at that point, it still works. And what I've said to people over the years, and I've studied this, especially looking at the interdays, because I know an hourly and a 10-minute work together very well. That's 1 to 6. So you can go up to almost 7 and the signals will still be pretty good. And I would say they're best when you're at 1 to 5, and they're still very, very good when you're at 1 to 6. I've learned in terms of the hourly just to kind of adapt a little bit, and you got to give it a little bit extra room because it's a little bit more sensitive than your typical 1 to 5. So hopefully you understand that. But we're going to go through the market here. I just wanted to give you a quick recap. And so what I was going to say is in terms of the market update on Fridays, I'm giving you a market update. But the reality is I'm really trying to teach you how to go about looking at a single time frame, how to analyze it. And you want to be able to apply this to any market or any stock. And that's really what the goal is here. Providing market movement update right now is really, really difficult. This is not, we're talking, the most volatility you've ever seen. Now, if you've been watching my show, this show going back, I think you would have noticed going into the end of the year, we had very bad momentum conditions and we had volatility starting to skyrocket. So coming into the new year, we probably would have been a little bit more defensive if you were watching and paying attention to my, to this channel. So anyway, that's the goal. I do like to show the minor trade setups that take place because if you're interested in doing that, especially on an intraday basis, they happen all the time on the spider and the Qs. And so a lot of times I like to do those examples. Let's go ahead and get into the market. We're going to start with the volatility, which is not budging at all on a weekly basis. We've still got a lot of volatility on the weekly chart. These bars are big and they don't look like they're changing much. On a daily chart, we are still above a rising moving average. So that condition is still negative, what I would consider to be a higher risk. And so as long as this red line stays above the moving average, or even if it breaks below it, if the moving average is still rising, then I would consider it to be pretty negative. So that's how I would look at that. Now, that's a shorter term thing, but if we look at the weekly, obviously this had turned in November and got above, and then the moving average started rising by the end of November, early December. We had a full-fledged negative signal on the weekly chart. Now, if you go back and You look at the periods where that's happened, it has not been pretty. Now, I'm not calling for another drop. I'm just saying, look, we do good analysis here. I'm not trying to make predictions. I'm trying to do really good analysis, and there's a big difference, okay? Predictions, you can go, there are other channels that get massive amount of views, and they love to make predictions. And the guys on TV making a lot of predictions, and they like to get a lot of views. And, you know, I'd love to get the views, but I'm not going to do that. I'm just not going to sit here and say, hey, the market's going down to 3,000 so that I get a bunch of people to look at my videos. So I'm trying to give you the best analysis I can, looking at all the indicators that I use and show you where the key levels are. And what we want to do is frame out the stock. So let's go to... let's look at the 4 time frames. I got my monthly, weekly, daily, and hourly. And the monthly is trying to work its way back to the 18-month line. I've been talking about this now for a while. Go back and watch a few older videos for the market that I do on Fridays, and you'll see that I've been talking about this now for about 3 or 4 months. And I thought that starting in the new year, there was a pretty good chance we were going to start to work our way back down towards this line, because it's been almost 2 years now. The weekly continues to struggle when we have bearish divergence when it comes to MACD, and we got a big red DI pop to the upside here as the market broke its trend line. So does that mean that the market's automatically dropping and it can continue to fall? No, it doesn't. But we want to start looking at key levels. And you know, what I would tell you is that I think the target to the downside is the 18-month on the spider, but this rally, the target was up around the 18-week, okay? And we came up to that, and we got really close to that yesterday, and then based on Facebook's earnings, we've gotten a pretty good sell-off right underneath. I mean, it literally almost touched it to the penny. So the high of the bar for the week is 458.12. The 18-week is 458.23. It's pretty close. Okay, let's go to the daily chart. So last week I was talking about the strength of this decline and the strength of the ADX, and the fact at the time we hadn't had any kind of a really good rally. We had some gap and craps that tried to rally and failed. And then, you know, we got it going. We had a move where it started the day and actually tried to take out those lows, and it was down below the lows that I talked about for about 15 minutes with 10-minute divergence. On the 10-minute chart, we had divergence in place, and then it reversed very quickly. So, I mean, this is what I'm talking about. If you're going to play these trades right now with all this volatility, you're going to have to play it pretty tight, in my opinion. So we've gotten a pretty ferocious rally, but what has changed? I'm not sure that anything has changed right now, because we rallied into the 18-week. And if you do a retracement, we got up to about a 618, and that's still within the parameters of what I would expect if we're still in kind of a bearish mood. Now, we still have a declining 18-day, and we have a declining 40. So we're coming back out of the zone. Now, the question becomes, now, what I would do is throw the Fib levels up and say, you know, can we hold on a pullback for 439 and a half, 439.75. That's like the midpoint. And really, as long as we stay above 435 or so, we could still be making some kind of a bottom here. Because that was a pretty ferocious rally. It's got a little bit of abnormal buying volume. Now, it's obviously not bullish based on what's taking place at the ADX. And ADX could be telling us that we're getting ready to make a whole new leg to the downside. We're going to have to look at the hourly chart to give us a little bit more insight into what's taking place right now. But the fact is the MACD kind of crossed over. I think this was such a strong rally to the upside that we got to look at the Fib levels on the way back down. Now, another way you could look at this is this last low. You could look at the Fib levels like this. Either way is really acceptable. And I actually, when I see that, and sometimes it's hard to tell, I'll put both up there and see if there's any confluence amongst the lines. So we can see pretty good area around 143, and then another really strong area right around 430, just under 440. So it's not a bad way to do that. Just line those up and see if you get some confluence. I wanted to spend a few minutes talking about Fibs. I haven't talked about them much, but when the market is really moving like this, that's when you want to use the Fib levels. Okay, so you use it on the way up, and then you use it as it's pulling back, and it'll give you a lot of insight as to how strong the pullback is, or whether it's really not that strong to the downside, and it's maybe getting ready to turn back to the upside. When the movement is really fast, the moving averages are going to be slow to catch up, and because they're a derivative, even though a first derivative, they don't move quite as quickly. So you just have to recognize that. Let's look at the QQQ. Actually, let's go ahead and look at the spider in an hourly. Let's just see what the hourly is doing. So the hourly is showing a little bit more strength here. Do you see how we made this move to the upside and we got a pretty nice reading here? Okay, now it wasn't as strong as the sell. So this is based on the sellers because it's red DI, and this is based on the buyers because it's green DI. So we still have a downward bias based on this, but this is so strong. I don't know that I want to look to short the first time it turns back through the moving averages or comes back down. I mean, you could do that, but again, if you're going to play these signals on the intraday charts, even in hourly, then you have to be playing them pretty tight. You got to be careful. You could do small positions and options if you want to play these kind of trades, I think, just because of the gaps and everything right now. It's a little nuts. So I would tell you that what I think I would like to see have happen is the way this has dropped, maybe bounce off the 40 and then come back to the 18 and give us some kind of a lower peak like that. And red DI is going to need to stay above 25 in that signal if this is really going to be a good signal. The one component that's kind of missing here is the trend line. Hold on a sec. Let me put up the trend line. Trend line, we've got some room, and it's even under the 40. So this is all happening above the trend line. So just little things that are taking place here because of how strong this move was to the upside. It's telling me that you got to be a little bit more careful about this right now. That's the actual trend line now. So if it drops down and then gets a little bounce and then it breaks down through the trend line that way, that would be one thing. But I don't know that I would short this above the trend line right now, unless we got another signal to take place if red DI can hold above 25. Okay, now let's go to the QQQ. And the one thing I wanted to point out here is, and I actually put this up on the chart, because everything else is essentially the same. It's a little weaker. We can define this as being weaker by looking at the last high and the last low, and look at this rally. It only got to the 50% retracement. Okay, so this compared to the spider, which got up to the 618, this only got to the 50% retracement, and now it's working its way back down. Now we've got a couple things taking place now. We're getting a lot closer to the zero line. Okay, but we have a lot of negative red action taking place, and red is causing the ADX to cross above 25. So obviously just a lot of volatility to deal with at this point. Pretty strong ADX taking place here, but we want to do the fibs the same way. Make it from here to here and then from here to here, and see if there's confluence coming down. Probably somewhere around this 350, 349 and a half, something like that is where the confluence will be if it is. And we want to watch and see if that can hold. So that's the update for the week, and we'll see you next time. Go ahead and post any questions if you have any. Thanks.